Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for coming on.
Good afternoon, Devin.
Well, Professor, stocks in New York closed lower overnight again as investors watch to see what we hear from Federal Reserve officials this Friday at the Jackson Hole Symposium. This time the Dow off by about 0.5% and the S&P by around 0.2%. Tech shares were flat. What's the story in the global markets?
U.S. stock edged lower Tuesday in a quiet trading session as investors weighed uncertainty over the path of interest rate increase. It was a third consecutive day of declines for major indexes as the market summer rally shows sign of stalling. The S&P 500 fell 0.2%, which was down 3.6% over the past 3 trading days. The Dow Jones Industrial Average dropped 0.5%, and tech-heavy Nasdaq Composite slipped 0.1%. The stock market has advanced from its June low as corporate earnings report came in better than expected, and signs of easing inflation inspired hopes that the Federal Reserve would slow the pace of rate increases. But major indexes faltered in recent days as hawkish comments from U.S. Fed officials returned the investors' focus on the possibility that aggressive rate increases will continue. Like a giant step or 0.75% base rate increase in September's FOMC meeting.
Right, with that meeting still several weeks away yet. But for Korean stocks today, a bit of a bounce back after some early gains that disappeared by midday. Many of the same issues at play in the end, though. With foreigners buying, the KOSPI was up about 0.5%. Those gains despite another decline for Samsung Electronics. Names like Samsung Biologics, LG Energy Solution leading the way. Tell us about the domestic market.
From last week, domestic market is adjusting to downsize as Korean won is seriously weakened and concerns of this year's economic growth intensified. But today, domestic market rose after 5 straight days drop. The benchmark KOSPI advanced 0.5% and Kosdaq even more advanced by 1.2%. By the end of this week, actually, quite a few events will be rolling out. In Jackson Hole meeting, U.S. Fed and other major central banks' views on global economy and inflation will be released. That would be a crucial hint for longer-term direction of domestic stock market. In KOSPI market, foreign investors aggressive buy led market upside with net purchase of 150 billion won. Most of large cap stocks declined today, even with the whole market expansion. But LG Energy Solution, Samsung SDI, Naver Kakao, and KB Finance rose today.
Right. Well, shifting gears a little, Professor, data show in the first half of this year, assets held by big Korean conglomerates were up around 50% year on year. They'd been stockpiling materials, apparently, over concerns that prices would rise. But now there's the risk that offloading them could be a problem if the economy is indeed slowing down. Tell us about this situation, Professor.
Yes, actually, the increasing inventory says, by definition, unsold goods and services by companies. So increasing inventory means something very negative sign for Korean economy. Korea's leading companies saw a 50% yearly increase in their inventories during the first half of this year. Again, this could be a signal for the beginning of economic recession. Particularly petrochemical and electronics firms' inventory rises were larger than other industries. According to Market Factor Leaders Index analysis of regulatory filings of the nation's 500 largest companies, 192 firms that have disclosed their inventories showed that their combined inventories rose to 147 trillion won level during the first half of this year from 98 trillion won a year earlier. Among them, 26 companies in petrochemical industries faced the sharpest rise. due to the soaring international prices of raw materials. Also, electronics companies experienced the largest increase in inventories as their combined inventories rose to 50 trillion won from 31 trillion won in 1 year earlier. For example, Samsung Electronics inventory went up to 32 trillion won level from 19 trillion won 1 year earlier. Another great chip maker, SK Hynix, saw an increase to over 2 trillion won from 1 trillion won 1 year earlier.
Right. Well, now, Professor, amid all this concern about rising interest rates, we had seen household debt fall this year for the first time in 20 years. Now, in the second quarter, though, we saw it's risen again by well over $1 billion. What would have caused households to borrow more? What do you make of the situation?
According to Bank of Korea's data, household credit hit a record high in the second quarter of this year, but its on-year growth slowed for 4 straight quarters amid tough regulations on lending and rising borrowing costs, which is interest rate. Outstanding household debt credit has reached 1,869 trillion won as of end of June, up 6.4 trillion won from 3 months earlier. This marked the largest amount ever since related data started to be compiled in 2003. Household credit refers to credit purchases and loans for households extended by financial institutions like banks. Of the total outstanding credit, household loan came to 1,757 trillion won as of end of the June, up 1.6 trillion won from 1 quarter earlier. Purchases on credit also grew 4.8 trillion won over the same period to 111 trillion won. In particular, mortgage loan totaled 1,001 trillion won, up 8.7 trillion won from 1 quarter earlier. The slowing pace of 1 year increase is attributable to tough regulations on lending and rising market rates in the line with central banks' monetary policy tightening.
Indeed. Right. Well, we'll have to leave it there for today, Professor. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.